It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Thursday evening, July 9th, 2015, wrapping up an incredible week of newsletters here with you guys and gals. I hope you had a great Thursday session here today. Boy, oh boy, if you watched last night's newsletter, pick a market. All four of the markets we talked about last night in the newsletter all made some great cash today. Hope you guys did well. Hope you learned something. Hope you earned something with us this week. We got one more session, though. We get a summertime Friday coming around the corner. No major news on the calendar, but we're getting a bailout deadline for the Greeks at midnight tonight. We got some ranges to work with. I love trading ranges because they make for easy opportunities with them traps, right? We talked about it last night, and we got more in store for you today. Before I go any further, though, I do want to remind you, everything that I talk about here in the video tonight is going to be covered in our beginner, intermediate, and advanced courses at School of Trade. I teach all of this information to our members at School of Trade. Check out SchoolOfTrade.com. I get a great free trial. I've got someone standing by there to answer any questions about membership there. I'll talk about that towards the end of the video. Also, I want to also remind you, make sure you're watching this video on our trading blog right now. I know our YouTube channel is a great place to see all of our other trading videos, but trust me, there are 3 reasons why. If you're watching the video on our YouTube page, there's a link right below the video in the description. That'll take you right here to my blog. 3 reasons why it's in your best interest to go over to the blog. First of all, you can download all the charts. All the charts you're going to see me using in tonight's video, you can download those by following the link right below the video here in the blog. Second thing, if you're not a member here of School of Trade and you'd like to get a free pass to come out and test drive our live trade room, I'd love to give you guys a free pass. Upper left-hand corner for that. And lower left-hand corner, right above my ugly mug, you'll see a spot for your name and your email address to join our nightly newsletter mailing list. That way you never have to worry about missing another newsletter video, no matter what time it gets published every evening, usually around 8 p.m. Eastern Standard Time, Monday through Thursday evening. Guys and gals, don't forget, download those charts, grab your free pass, and register for our nightly newsletter mailing list. If you register for the mailing list or you grab your free pass, just heads up, I'm going to send you a verification email to make sure we verified we get the right email address. So check your email inbox and make sure you find that verification email. Speaking of the Greeks, speaking of our good friends in Europe, let's start out with the Euro futures here in tonight's final newsletter of the week here. I hope you guys have a good weekend plan. But we got work to do tomorrow here first, though. We got some money to make tomorrow so we can go have some fun this weekend. What's up with the euro? Well, surprise, surprise. There were some bull traps up here at this range high. Exactly what we talked about last night. I hope you guys took my advice last night and did not buy that high. Last night in the newsletter, we talked about a ton of resistance. Overhead, there was a measured move up here. This is an ABCD just drooling to be sold back down today. Still feeling bullish. I haven't changed my overall sentiment on this right now because I'm still bullish the recovery. I'm still bullish a solution in Greece. I do think they're going to figure this out, and then I do see this price going higher. But we're going to trade the chart for right now, and as you can see here, we are smack right in the middle of this price wedge. So right now on the euro, getting ready for tomorrow, we got a big midnight deadline, right? Big midnight deadline here tonight. Apparently, everything's got to be sorted out by midnight tonight. Yeah, right. You know it's not going to happen. There's going to be some extension. They're going to kick it down the next week most likely. But make sure you're aware, though, this is very clear what's happening right now. This market is tucking. It's tucking for safety right now ahead of that potential news after midnight tonight. Bottom line is, rather than trying to anticipate what the reaction will be, just be ready for it. And right now, we've got a definite sideways range with a bearish bias now going into it. So we have to default here by looking for traps. I'm looking for traps at the lows. I'm looking for traps at the highs, and I'm staying away from the middle. The one important thing you want to remember, and this is going to be a common theme among all of these charts tonight, when you see a trading range, remember the middle of that trading range is always going to be the sloppiest, the most inconsistent. And the reason for that is, say this is your trading range. Well, remember, these markets, this is not a video game. There are sellers that react to the highs, right? That pushes price off the highs. There are buyers, right? Buying discounted prices, buying at the low. Well, the problem is the buyers subside. The sellers, of course, take a break when the market sits right in the middle. So a lot of ranges you're going to see on these charts right now. It is summertime. I love ranges. They're very easy to trade because you just look for the uneducated traders out there to buy above the highs, sell below the lows, and you trap them on the wrong side. Relatively easy. But this is why, remember, we're not operating in some simulated environment here. Sellers are reacting off those highs. Buyers are reacting off those lows. So right now, you want to be patient here in the middle of this range. Stay away from the middle. And the best opportunities right now are going to come as this price goes higher, looking for a fake break of the high to sell it back in. As it goes lower, fake break of that low to buy it back up. Stay away from the middle. Don't buy those highs. Don't sell those lows. And if it just sits tomorrow morning in the middle, you know what to do. You sit on your hands, right? Don't touch this thing if it's right in the middle of that range. The word of the day is going to be fade, right? Fade those breakouts. That means buy those lows and sell those highs on the euro until we know more. I'll come back next week once we know more about what's happening out of Greece. We'll hear it tomorrow. I'll be trading this market live in real time tomorrow morning with all you guys here at School of Trade. So don't forget, I'll see you guys in the trade room and the chat room for that tomorrow morning, and we'll be reacting in real time. Let's move from the euro here to the black gold, the crude oil futures. This is a 16 anchor chart here, 815 contract on crude. Bearish market on crude. Again, another example. Get an easy fade off the high. We are expecting this market to finish its move back down to that range low. So keep looking here. I've marked up this 52.32 area. This is going to be a really important spot here. This is where the buyers have undoubtedly bought a pullback there. So when it gets below that, we shouldn't have any problem going down to that 51.21. So look for additional selling opportunities below that 52.32. Bottom line, crude oil is trading near the highs of a trading range with a bearish bias, which means we're looking for bull traps above the highs to get short down to those range lows on Friday. So playing this, again, easy to see here. Bearish bias going down. I want to err on the sell side right now. It's a little bit challenging to tell you to be a buyer right now in this crude, but it may go higher in the short term here as price tries to retest those highs. One thing we know about it though, bear bias, trading range, stay the heck away from 52, right? Be very, very careful, right? Smack in the middle of that range. That's where you're going to have the most challenging price action. Let's play that game, though. What if price goes up? What if price goes down? What if price goes sideways? If price goes sideways right in the middle, take the hands and sit on them, right? Stay away from the middle of this range right now. If price goes higher, the same thing that we did here today. We're going to look for price to try to go up. There's a measured move here. That's why I put it up here. There's a measured move area overhead. There's a ton of resistance here, right? There's a swing here. There's a channel high here. There's a measured move resistance here. There is a trigger zone there. So bottom line is absolutely there is tons of potential here that these bulls, especially if we hear something from Greece, right? We have no way of telling what we're going to hear, how it's going to be reacted to. So it's better right now to be ready for it. So let's say we do jump up here overnight. I'll still be looking to fade this sucker right back down in. The fundamentals haven't changed on this. Trade the chart, not what you see in the front page of the newspaper right now. I still can't believe we hear about this every day. I still can't believe it. I saw a stat the other day that said well, anyways, I won't bother you with that information right now. But bottom line, trade the chart, and all we got to worry about right now is bearish bias. Look to fade those highs. Keep looking for those bull traps. And then some targets waiting for you down at the bottom, 51.21, 50.92, and then you got to be looking for bear traps down at these lows. We have this is a really long-term support level. This support level comes from like 3 months ago, right? So it's very, very long-term, and you'll notice we haven't tested it yet. So if we do get down to those lows, bears, take your profit. And then you know what to do, right? How do you buy those lows? What's the best way to buy in a bearish trend? You know this. You've watched my previous newsletters. Wait for the sellers to try twice, right? Find out where their stops are. You know where their stops are going to be. Imagine you took the short trade. Where would your stop be? And buy right into those stop losses. Remember, though, if you're trading long in this bearish bias area or in this bearish trend right now, every trade that's counter trend like that, treat it as a scalp until proven otherwise. Tight stop, tight first target. Move that stop to point of entry and then let it run, and then you got some good targets waiting for you back above you, back to those, again, channel highs, right, range highs. So very, very similar here to the euro. Very, very similar. The only thing I see different about this chart to the euro chart is that we don't have that wedge, right? There's no real well-defined wedge on this chart. So it's really the same thing though, right? It's a trading range with a bearish bias. Bull traps the highs. We're looking for buyer failure at the highs. We're looking for seller failure at the lows. I'll be trading this market with you guys and gals, all the students at School of Trade tomorrow morning in the trade room and the chat room. Come out and see us. And then moving on here to the S&P. Moving on to the S&P here. I told you guys. I told you, don't sell these lows. Don't sell those lows. If you remember, last night we were down around those lows. Talked about it last in the newsletter. Again, continuing to see trading ranges. Here's another market, once again, with a bearish bias going into that trading range. It's going to be, you're going to probably be able to finish my sentence right now, right? So what are we looking to do here? We're looking for traps, right? We're looking for traps. Do not buy this low. Let some other poor sucker buy these. I'm sorry, do not sell this low, right? Let some other poor sucker try to sell this breakout at this low. That's the fourth time this low has held. We talked about it last night in the newsletter. It's going to make a great target, right? That low at 37s makes a great target, but don't you even think about selling that low, because you get the swing low, the range low, the measured move support, long-term support, extension support. The list goes on and on. Now, there will eventually be a time where we break that low, and if we do break the low, I'll be looking for the sellers to try again and fail to fade that breakout. I won't call this, I won't be able to sell it until we actually hold the retracement, right? Until we actually fend off those bulls trying to bring it back in here right now. So again, very, very similar here. Very, very similar here. You're looking for selling opportunities at resistance areas, with the best opportunities right now on the S&P coming all the way up at the highs. What if you're a bull right now? What if you're a buyer off these lows here today? If you bought those lows, right? If you bought the lows here, use these areas as targets. And then if you're a bull back up to the high of this range, what's the plan? The plan is very simple. Look for sellers to fail. Look for those sellers to try here and fail. Sellers to try and fail. So if you're a bull right now, find those short-term sell zones I show you overhead and buy right into those seller failures. But don't get greedy. Remember, you're counter trend trading right now, so make sure you take a quick profit target, tighten up that stop, the point of entry, and let the rest of the position run on this one. All right, guys? Best trades. The best trades are going to come up near the highs of this range if you're a seller, and of course, down near these lows if you're a buyer. Be very, very careful right in the middle of this range. It's going to be real, real sloppy in the middle of that range that are on the S&P. So S&P, literally, this could be the same chart as crude oil. S&P is bearish, trading at the lows of the range. It was when I typed it up here. We just saw this price spike up a little bit here. So we have to expect bear traps at the lows and stay patient for the best setups on the S&P up near the highs right now. It does look like they're going to blow right through this. Yeah, they're blowing right through it, not even reacting to it. So you can pretty much remove that spot for right now. Next area of resistance to look for the reversal is going to be 61.5, 67.5, and then up to those highs. Stay patient for this. Stay away from this middle. And again, look to sell those highs, buy those lows, with the bias definitely being to the bearish side right now on the S&P. You know the plan for that. That's another market we'll be trading tomorrow morning in real time. And then how about that gold? Gold, definitely wrapping up our nightly newsletter here tonight. Wrapping up our newsletter edition here, our final newsletter here for the evening. We got the GC market, the yellow metal our 16 anchor chart. Gold is trading near the highs of the trading range with a bearish bias, which means we'll be looking for bull traps above the highs to get short down to those range lows. Again, very, very similar chart here. You can see you get a bearish bias into that trading range. This, again, you can probably finish my sentence right now. You know what I'm looking for. I'm looking for bull traps up at the highs. Take my profit off down at the lows. Be very, very careful, though. Do not sell those lows. Do not sell those lows. Sellers, if you got short with me today off the highs, you're holding down to the low. Tighten down that stop loss here. You should have taken already your first profit target on that short, and then hold the runner, right, for the rest of it. Wait for now, if it's going to go higher, wait for the buyers to try again, and try it again, right? Sell it off that high again. We'll take our profit down at the lows. You got some easy profit targets waiting for you down at the lows of the range, down at the targets 50.4, and then stop your selling down at these lows. Look for some other poor sucker to try to sell those lows and buy right into their stop losses. That'll throw that price right towards your first profit target, move that stop to point of entry, and hold on tight to go back up to the highs. Guys, if we do push higher here on gold, again, we're looking for bull traps. We're looking for bull traps. And what that means is, it means we're looking for the buyers to try and fail up at these highs, up at these resistance areas overhead, no matter how high it goes. I don't care how high it jumps up. Right? Big pop, in my opinion, will bring it right back down, but wait for those buyers to try and fail. And if you don't know what I'm talking about, that should be a very, very big clue here. You need to get some education. You got to get some knowledge of how these markets work and how professional traders actually make profit with them. Guys, we don't rely on indicators. We don't rely on indicators. We rely on understanding how the markets actually work, right? If you want to be a great piano player, you don't need a fancy piano. You need to learn how to play the keys. And tomorrow morning, we're going to do that together with our students here at School of Trade, starting out at 8 a.m. Eastern Time. All these charts are pretty much the same, as you can see. Bearish biases, sideways ranges. Stay focused on buyers failing at the highs to get short tomorrow. Members, you know exactly what I'm talking about. If you're not a member here at School of Trade, I'll encourage you to come out and join us. Join us tomorrow morning in our trade room. We're going to open up tomorrow morning at 8 a.m. Eastern Standard Time for our students here at School of Trade. We got a great trade room. We got a great chat room open 24 hours a day. Also, don't forget, download those charts, register for the newsletter, grab your free pass. And if you'd like to get a free trial, we get a great free trial here at SchoolOfTrade.com. Check it out right there on the homepage. We have 3 levels of membership. That way, there's always a home for you here at School of Trade, no matter what your level of knowledge or what your experience level is here for the financial markets. I've got someone standing by 24/7, 365 to give you guys a hand with any questions you might have along the way. Don't be a stranger. Send me some feedback. I'm JJ at SchoolOfTrade.com. Post me a comment below the video. Share it with some friends. And don't forget, be here tomorrow morning, 8 a.m. Eastern Time. We'll be trading the reaction to the Greek deadline. I don't think it's going to be any difference tomorrow, but we'll still be here looking for that reaction to it. Tomorrow's a summertime Friday, which means early in, early out. Enjoy the summertime weekend. Next time we have our nightly newsletter will be Monday evening, July 13th. Monday, July 13th. So no newsletter on Friday afternoons. Have a great weekend. Don't forget the helmet. Don't forget the sunblock and water. Stay hydrated out there. Be well. Be nice to each other, guys and gals. And thanks so much for being here this week. We have had an incredible week here at School of Trade. I hope you learned something with me. I hope you earned something with me. I'll see you guys next time. Adios, amigos. Bye-bye for now.